Hello, Shane.
Hello, B.
Shane, I feel like World War III is coming. Do you think so?
No. What have you been reading? Nostradamus or something like that? You know, that everything disastrous will come out of the Middle East.
Well, just given that Donald Trump said that it probably would get worse, J.D. Vance said it would get worse, and I've been looking at markets the past few days. It does seem like things are just escalating and going worse and worse. Well, first of all, last week we had the U.S. killed the Iranian supreme leader. That's obviously...
I think the Israelis were the ones that dropped the bomb, actually. But anyway, both of them.
That's obviously an escalation of war versus what we had last year when the U.S. just attacked a nuclear facility in Iran. There have been a lot of attacks on neighboring countries nowadays.
Yep. Very different. Yep.
And they're all oil-producing countries as well. So it explains the $10 increase in WTI price. Before all of this escalation, it was around $65 a barrel.
I think Friday was $67 a barrel.
Now it's around $75 a barrel. So that's a pretty sharp uptick. That's roughly
This is West Texas.
This is West Texas,
Brent's
not Brent.
Usually about $6 higher or something.
Yes. If you look at the financial markets as well, we've seen the US market not dropping as much, around 1 to 2%. But European stocks have been down about between 3 and 4% over the past few days.
That's 2 days in a row, I think they've had falls like that.
Yeah, basically. And, well, Asian stocks actually have fallen a little bit higher even.
Yeah. I mean, you certainly see a lot of red here today.
And, I mean, war is never a good thing, obviously, because it increases geopolitical uncertainty. It's hard for companies to have plans to invest. It puts downward pressure on global economic activity. I don't think that's a good thing for Australia because we do export a lot of commodities that basically depend on demand from abroad. 27% of our GDP is gross exports. So that probably would put downward pressure on economic activity abroad as well as in Australia. And maybe some people are even worried about a stagflation scenario because you have, lower economic activity, but you have higher fuel prices in the meantime.
I think they read the playbook from the 1970s. Oil shock, high unemployment, high inflation.
But by your estimates, a $10 increase in global oil prices can translate to a 10 cents increase in fuel price at the pump for Australians. So, I mean, that's pretty material. We already have a bit of an inflation problem here in Australia. I feel like this is just, again, adding fuel to the fire, literally. So, every aspect that I look at, I feel like things are going pretty bad. So, of course, I'm worried.
That's always my wife was telling me that last night, that it seems this year all the news has been bad.
Yeah.
We start with, Venezuela and...
Then Greenland.
There was attack on Greenland and the Epstein's everywhere, it seems, tied up with everything. Maybe even Epstein's in here, like another wag to the dog moment. I mean, war is horrible. And, these are people's lives that are being affected here. And many people end up losing their lives, and that's horrible.
And some already did. I mean...
And you sort of got to wonder, someone related Iran to the Hydra, you chop off the head and replace one leader, then another one will come along. So what do we solve? I mean, without getting into the geopolitics and all these sorts of things, I guess because I've been around for these things for so long, Israel's had multiple wars, 7-day wars, 12-day wars, go back to 1967, probably even before that. That area has been fraught. We had the OPEC oil crisis of the 1970s, which was before I got a V8. After that, I decided, I should get a V8 anyway because I wanted one. Well, car, V8,
Oh.
But V8, big American car. I know it's environmentally irresponsible and I do other things to try and offset that. But I always dreamed of having a V8. I think I spent too much time watching the Brady Bunch, that American Did you watch the Brady Bunch?
Nope.
You don't know that one. You can Google it afterwards. But it was a fantastic American TV show, and they had a giant station wagon and a giant convertible, and I aspired to have one of each of those and a split-level house, just like the Brady Bunch did.
But how does the Brady Bunch make me feel better when I just listed out a lot of negatives about all of these escalation?
What I was trying to say was that we've seen these things before, that a conflict has often come out of the Middle East. I remember when I was a kid growing up, we were told about Nostradamus that some sort of crisis would come out of the Middle East, and I guess I've been waiting for that ever since. And then often it flares up and then it goes back down again. So notwithstanding the fact it's horrible for humanity to have these events and they don't necessarily solve anything, oftentimes they just radicalise people and make it worse down the track. Who knows? Hopefully that won't be the case, but that is the risk. I mean, if you put it around the other way, the evidence that US and Israel is degrading Iran is quite significant, and I suspect they'll soon run out of missiles. So therefore their ability to wage war will be limited. There's the history of these things that oil prices go up. That causes a big shock to the economy, and that's horrible. And that's what we're bracing for at present. But then the debate is how long the war goes for. If it's a long, drawn-out war, yes, then it could be a lot worse. But we know that Donald Trump faces constraints. His MAGA movement was partly inspired by a desire to avoid more forever wars. And so his base won't handle a situation where there's lots of Americans coming back in body bags and lots of troops on the ground. You know, here we go again, another forever war. And he's got the election coming up, of course, later this year, and in America, rising gasoline prices don't go down too well with political support for the major parties. So I think there are constraints around this which will ultimately pull it back. And then the question is how long it goes on for. But if you put it in a broader context, you could argue we had a great start to the year in equity markets. US was a bit of a laggard, others were doing better. Europe, I reckon, is down, 3% for the last couple of days because they're heavily dependent on LNG or gas.
Mm. And a lot of that went through the Strait of Hormuz, which is basically shut at the moment.
You did that count? 25% of gas goes through the Strait of Hormuz.
25% of LNG, 20% of oil.
Yeah. So it's a massive amount.
So it probably hurts Europe a little bit more.
Yeah, it probably hurts Europe more than the others. And then we were at record highs. Just on Monday, we were at record highs.
Yeah.
And if you looked at the US share market, you can make an argument from a technical point of view that it was looking kind of toppy or vulnerable to a correction. And we said at the start of the year, at some point along the way, you might get a 15% correction. But markets haven't exactly gone into panic mode.
Nope.
So it's not that bad so far, but obviously there's further to go in all of this. The other thing I always look at this is that we've seen so many periods like in April last year when it seemed that, we were going...
The war is ending.
The world is ending, catastrophe on the tariff front, and then Trump did a TACO, which is... I know people like to joke about TACO, but I kind of think it's a bit unfair to Trump because it's just his negotiating where he goes in hard and then he pulls back once he starts to get something in response. And odds are you'll probably see something like this eventually. But as he said, it may take 4 or 5 weeks or who knows precisely. But if you look back through the history of these things, you get these falls in share markets often at a point when the market is vulnerable, it comes down, wipes out a lot of the excessive optimism, then the market is happy to proceed again. But in the meantime, then the economy starts to pick up again, the pressure comes off, and the rising trend in shares continues. And trying to time these things, I reckon, is really hard. You think back to June last year when America dropped those huge bombs on Fordow and other nuclear facilities in Iran. I agree, totally. That was a lot more targeted. This time around, it's broad-based.
Yeah.
And the Iranians weren't lashing out and attacking all their neighbours.
Yeah.
So very different. But at the time, everyone thought, well, this is going to be a disaster. And it turned out to be a non-event. So trying to time these things, I reckon, is really, really hard for individual investors. So that's why as a superannuation member, as an individual investor, unless you're really into timing markets and looking at charts and all those sorts of things, you're better off just sitting tight because by the time you get out, it's usually after a fall, and then you get back in, usually when the market's gone back to where it was when you got out or above where it was when you got out.
Yeah, I think I really like this saying, for the layman investors, basically. Just remember that even when markets fall, you still own the same number of shares. You're not actually owning less shares. It's just that it's worth a bit less at the moment. I think our investment thesis is that we're still going to see reasonable returns on a 12-month basis.
That's right. And your super and my super, every 2 weeks, we get
a top up.
We get a top up, and the proportion of your salary, what is it, 12%?
12%,
12% of your salary is now buying more shares than it was last week.
Yeah, basically. So you're getting a bit of a bargain if you
You're
think
getting a
that
bit of a
economic-
bargain. I kind of look back and think, well, the 87 crash, you probably don't remember that. It was probably before
that,
you were
that
around.
predates me.
Well, yeah, I know, but the 87 crash occurred 3 years into my career. And I'm thinking, geez, most of my super is in this. And fortunately, back in those days, I didn't have the ability to go online and switch out to cash because it would have been a monumental error. Because after the 87 crash, I was able to pick up shares at half the price for the same dollar amount. I could pick up twice the number of shares. So it was a good thing.
Yeah.
No, I know it wasn't if you're close to retirement. That sort of leads to agitation and so on. That's why you need special advice around going into and
Not
through
financial
retirement.
advice, hashtag. Anyway, on to brighter things, better news. I think.
Yeah, we're saying this isn't financial advice. So if you want financial advice, go see a financial planner.
On to better news. Today we got a pretty good update on Australian economic growth, which is from the GDP data. So that shows you how much we've
But don't
generated
you think
as a
that's
country.
just ancient history? It was back in December.
Yeah, it was back in December, but it's still the most comprehensive look that we have into the economy. So,
And what did it tell us?
well, I think it was rather strong. Over the quarter, it grew about 0.8%. That doesn't really mean anything to most people, but over the last year, it went up by 2.6%. So that's actually basically the best rate that we've seen since the beginning of 2023. We haven't seen that rate for a while now. I think one thing that made me think that this is a positive reading is that there was a broad-based growth in a lot of different sectors of the economy. Household consumption went up by 0.3%, a little bit weaker than a lot of people expected, including us. But we saw that people spent a lot more on travels and tourism, events, as well as furnishing, clothing. So there was a lot of increase in discretionary spending. Dwelling investment was decent as well as business investment. It was weaker than last quarter, but we still see sustained increase in investments into things like telecommunications.
The previous quarter was data centers and things, and they're a bit
but
lumpy.
this quarter we still saw a lot of resilience in that data center and telecommunication story. That level of investment was rather strong. Government spending was strong. I mean, is that a good thing? Is that a bad thing? It really depends on you. I don't think it's a good thing in the long term for the country, but it still added quite a decent chunk to economic growth in Australia.
Because government grew 0.9, which
Over
is
the quarter.
faster than GDP.
Yes. And it's been faster than GDP
But I
for a
thought you
while.
said it was slowing.
Well, the pace of growth was slowing, but
It wasn't so
But
much
it's still
you.
very
Other
strong.
people say it was slowing. But I guess the thing that I get excited about is that the level of public spending in the economy is still around record highs. It's 28%.
So you say it's
or
not a good thing.
Well, I kind of worry that, look, I'm sort of in that camp that says, you've got to give primacy to free market forces. They will provide better outcomes over the long term than government intervention, unless there's a market failure. But we should also have a good social safety net. There is a role for government. But there's a question mark as to whether the current level of government spending is too high relative to our history. Like it is, it's a record high. You'd have to go back to World War II to see anything like this. And that worries me because it doesn't leave a lot of room for the private sector, you and me and Marcel over there, to get out there and spend more because as we do that and everybody else in Australia does that, we'll bump up against capacity constraints. This is the Reserve Bank saying we bump up against capacity constraints because we've got this high level of government spending in the economy.
Yeah.
So that's what kind of worries me and therefore whether it's contributing to that concern the Reserve Bank has about demand in the economy being too excessive relative to the economy's ability to meet that demand.
And I've seen a lot of criticism about this, about how, there's a lot of needs for government spending, especially as the country is getting a bit older. There's a lot of needs for social care and healthcare and NDIS and all that stuff. And I don't think our criticism is for, that kind of spending. It's more the criticism that government spending is very high at the same time as there's constraint in other sectors of the economy. They should probably take a step back when, our economy ability to supply output is not at that level yet.
Yeah. That's standard Keynesian economics, that when the economy recovers, the government should step back. The other interesting thing is CBA had an interesting chart the other day which showed the proportion of the workforce in health. And compared us and Canada, I think there's some others in there, but anyway, Australia, Canada and the US all saw a rising share through time, which you would expect, particularly as populations age. And then starting about 4 years ago, we start to go ballistic relative to them. And I sort of wonder whether, something's gone wrong here, that we've let it get a bit out of control. I mean, it's important to have, but other countries, let's compare us to Canada. I mean, America's a bit messy. But, we already had good outcomes from our health sector, but we've ramped up the spending on it dramatically. A lot of it is NDIS related, and you kind of wonder whether that's sort of gotten a little bit out of control.
Yeah, it's interesting because we keep seeing these statistics, and then when I go to the doctors, I go to the ER, like it's still a massive waste.
You say waste?
A massive weight. Sorry, who's thinking something else? So I don't know if there's any issues with productivity level in our country or not. Because yes, you still see very strong growth in healthcare and social care. But at an individual level, you're not really feeling it. You're still feeling like there's a shortage of doctors. Doctors are still saying that they're very burnt out.
Yeah.
So I'm not sure what happened there. I mean, with productivity number today, we got a pretty good number of 1% increase over the year. Non-farm productivity is a bit lower, 0.4%. So agricultural productivity has been very high in Australia. It's not a terrible number. I mean, at least it's going up slightly after 10 years of basically flatlining.
I mean, productivity is important because historically, and I think a lot of economists in my generation have a problem here because we started our careers when Hawke and Keating came along and they deregulated everything and opened it up and privatised and...
History lesson again.
History lesson. And then we got this massive boost in productivity. Our living standards went super high and Australia was the envy of the world. Get the violin out. Howard and Costello continued that, and then ever since then it's been a bit of a blah in Australia, and productivity growth over the last 10 years was virtually flat.
Wow. Why do you think that is? Ballooning government spending?
I think there's a whole bunch of factors. We need to reinvigorate the reform agenda, make it easier for... I mean, you do that chart, how long does it take to build a house or a unit in Australia? Was it 50, 60% longer?
It's around 60% more than before COVID.
That means if it used to take 9 months... we're now well over a year in terms of finishing the thing. So that, I think, is a big problem. But what does it mean for the RBA? I don't think we answered that one. What does it mean for the RBA? If we go to Tuesday, like we're recording this on the Wednesday, if we go to Tuesday, yesterday, it looked like the RBA was sort of leaning towards a rate hike in March in 2 weeks' time, on the grounds that everyone now is talking about inflation from higher petrol prices, and they're worried that with inflation above target already, then it will just further entrench it. And I can understand that. And when we came in this morning, I think the money market was saying 35% chance of a rate hike in
now
March.
It's already around 13 to 15%. It's basically halved.
It's halved. And part of that was because if you look at the GDP numbers, consumer spending was a little bit weaker than expected. And I think some of the indicators regarding labour costs were less.
It's slowed down a bit. It's still growing, just at a slower pace. I think for us, we don't really think it changes the dial much in terms of March. We still think that it should be a hold in March. Obviously, right now the RBA has a tightening bias. So there's still a chance of a hike in May. But it really depends on what numbers come out between now and then, the inflation numbers. Yeah. So... overall, I would not say it's a bad result for Australia. It's still saying that our country is growing at a rather okay pace.
Yeah, okay pace. But it could be better though. If we had more productivity. If we had more productivity, it'd be a lot better. So thanks everyone. I hope that was of value and all the best. Thanks, mate.
Thanks, Jen.